Rohr here with an early concise highlight on Friday, September 26, 2014. And it's currently 7 a.m. U.S. Central Time, and it's going to be concise today because even with the further extensive trend activity in the foreign exchange, we covered all that in yesterday's concise highlight, and there was quite a bit of movement in the equities and govies on short money yesterday, and we're going to be substantially following up on that, moving on to the actual market activity, whereas we had felt the Wednesday holding action against the early Wednesday after the market being driven down from the gap lower Monday and through the day on Tuesday. We had felt that the Wednesday holding action against the important September 15th, 1970 low might have set the bottom, at least for somewhat more of a sustained fill out, even if the market was topping up back into the 2000 area, give or take a few bucks, and that would have been a fill out of a right shoulder of a Head and Shoulders. However, with the market quickly cracking that area yesterday morning and shortly thereafter watching the 30-minute and hourly MACDs into late morning actually escape the lower runaway bands once again to the downside right here, that was a clear sign that these markets were ready to continue lower yesterday. Now, the interesting part is that so far today we are higher by a bit. We're up about $2.50 back up to 1964, but that really doesn't mean much in the context of the resistance now being up at the 1970-71 area. That's where it'd have to get back above to show any real strength. Lower supports, even though they don't quite correlate with these Fibonacci levels, are back in the 1950 to mid-40s sort of area and 1920, and the big supports back around the gaps from late May back around 1900, the ones that were held after the late July sell-off back in early August. So that's what we're looking at on the short-term view of the S&P. Basically, that violated support now being resistance just above 1970, and next lower support, while we do have this halfway retracement at 1955, expect you could see 50 into upper 40s, which is the congestion on the weekly chart as well for the lead contract before we hit the real support. And that pretty much does it for the short-term view of the S&P 500.